Thanks for clicking. My name is Mark Mitchell. I'm a mortgage broker here in London, Ontario. China's property crisis continued to get worse over the past few weeks, spreading far beyond Evergrande as missed payments, defaults, spiking costs of borrowing, and weakening sales data showed a deteriorating market throughout China. So what I want to do is get right into the Chinese property crisis update, and we'll start off with Evergrande, which both precipitated the current real estate crisis and still owes over $300 billion in offshore bonds.
What? How much what?
We'll then move on to real estate developer Shimao, which, as we discussed in September, was once considered one of the best Chinese real estate developers and has since gone from very good to very bad.
Very bad.
And I think they really demonstrate the extent to which the current crisis is unfolding. We'll then move on to the overall Chinese property market, with data coming in from December showing that it is continuing to get worse, with sales and values dropping and a continual weakening of local government finances, which, as we discussed in September, is a growing problem in and of itself. We'll then take a brief look at how the crisis is inevitably spreading to the banking sector, which from the beginning was one of the major worries, as it was in 2008. And then we'll conclude at looking at some early signs of how this Chinese property crisis could and is hitting the West. So I do want to get into all of those details very soon. We do have more updates coming out next week as Canada's inflation numbers are set to be released. And we do have Canada's monetary policy report, which should have some predictions for the Canadian real estate market. Click like and subscribe if you want to get those updates. But for now, let's get into Evergrande. On to Evergrande. Problems didn't get any better for the distressed developer over the past few weeks, as Evergrande was forced to move from its offices in Shenzhen as a means to cut costs. And as we all know, when you are evicted from your home, when you're forced to move from your home, it's really not that great a sign for your finances.
'Cause I got no place else to go.
For their part, Chinese citizens, those who have had the construction of their homes delayed, those who put their life savings into Evergrande and still do not have their homes, were more than happy to greet the developer in its new headquarters. In addition from having to move from its home, Evergrande did secure an extension of its debt from its onshore bondholders. We did talk about how Evergrande had already defaulted on its offshore bonds, but it also owes a lot of money to onshore creditors, those creditors within China. And Evergrande just recently, yesterday actually, did receive an extension on those bond payments. So when you default on offshore debt, that's one thing, but when you default on onshore debt, on debt owed to your onshore creditors, to Chinese creditors, that's a whole nother different story, and I'm guessing Beijing does want to avoid that at all costs, as it could create more political instability than we've already seen. There was a lot of other news on Evergrande and who it owes money to, but we're going to get to that in a few minutes. On to Shimao. Shimao, if you remember, was an investment-grade real estate developer that we talked to in December. As far back as in November, it was deemed to be one of the more highly rated, one of the safer real estate developers in China.
Shimao, up until the end of last year, was seen as a relatively healthy, financially healthy developer here in China.
And things went from bad to worse, again, for Shimao over the past few weeks. Shimao has suffered multiple downgrades over the past few weeks, with the S&P and Moody's both moving it to junk status. The S&P, which as far back as November had rated the developer as investment grade, as safe, noted that the decline is worse than we previously anticipated. We now assess the company's liquidity to be weak. So investment grade to junk status within a few months. Not good.
It's a problem.
And this was really one of the biggest worries from the beginning of this real estate crisis. It wasn't so much just Evergrande missing its bond payments. The real worry is that once light got shone on to all these other real estate developers, all these developers that everybody thought was safe, that this light would uncover rot in the system. And I think Shimao is starting to show that even firms that were once graded investment grade, once people are getting into the books, once they're taking a closer look at these developers, we're starting to see more and more downgrades as time goes on, and I do think that that's going to be a sign of things to come, especially throughout 2022. Speaking of things to come, we now have updates from the Chinese real estate data in December, and it's also not looking very good. 13 out of the 31 Chinese provinces saw home sales drop by over 20%.
Is that a lot?
That's a lot.
Not only are the amount of sales dropping, but so is the value. The Chinese data showed that over the course of 2021, the value of their real estate sales had actually dropped 3.5%. 3.5% doesn't seem like a whole lot, except when you remember that the Evergrande crisis really started in August. Yes, it's been going on for years, most definitely, but the crisis in terms of it starting where it can start to affect perception, when it can start to affect market participants, when it really hits the news, really started in August. So the Chinese market was going along just fine, and then we started to see this huge drop in home sales. And overall, year over year, total of 21, we saw a 3.5% drop in the value of Chinese property. If that were to happen in Canada or in the United States, that would definitely be of significant concern. And I think this is really borne out that this was really a backloaded crisis, that when we look at the data for December, the total amount of sales actually dropped 35% compared with the previous December. Chinese real estate sales in December of 2020 were 35% higher than they were in December of 2021. Year over year, that's a massive drop and definitely a sign of a massively weakening Chinese real estate market. So I do think that's going to be a real problem, and it's going to present itself as an even bigger problem when we look at local government finance vehicles, which we talked about in December. If you remember, LGFVs, local government finance vehicles, are ways for local governments to borrow money off the books. It doesn't show up on their finances, and it was uncovered late in 2021 that Chinese local governments had about $8 trillion in off-the-books debt. Now, $8 trillion in debt isn't, I don't want to say it's not a big deal.
A lot of money at stake.
But it's manageable so long as the game keeps going, so long as the real estate sales continue. But as we've seen, they're not. So we're seeing a lot of financial distress with these local governments. So much so that a lot of the state banks in China, it was reported this week, have started to pull back their support for these LGFVs. The government's pulling back, the central government banks, the main banks, the big banks, are pulling back their support for these local governments. So these local governments are not only getting their money from the real estate sales, they're also having a hard time borrowing as well. And we've seen what this constriction of credit has done to the Chinese real estate market. It's one thing when a real estate developer, when a company, a private corporation, doesn't make its payments. It's a whole other thing when governments start to default. Government default that can cause a whole host of other problems, make it more difficult to borrow, etc., etc. So I think that these LGFVs and how this unfolds is going to be a big issue throughout 2022. Speaking of big issues throughout 2022, it was reported this week that one of the biggest banks in China, China's first non-state controlled bank, their first truly private bank, had up to $20 billion in exposure in these troubled real estate developers. One of the biggest worries from the beginning was that the real estate crisis would spread to the banks, as it did in 2008. Minsheng Bank, the first non-state controlled bank in China, was once hailed as one of the success stories, was going to be one of the most powerful banks in China, has a ton of exposure to Evergrande, and that's starting to come to light. And as we've talked about, it's one thing to miss payments to offshore creditors, to Western investors. It's a whole other thing to miss payments to onshore investors, in this case, one of China's biggest banks. So, as this crisis unfolds, we're starting to see that it has and is spreading over to the banking system, which I think is going to be a big deal in 2022, as we're starting to get an idea of how these dominoes are falling over, how these real estate developers' inability to get cash is also impacting the banking system and who they owe money to, and I think that's going to be one of the biggest stories in 2022, and we'll probably see as these updates come out, as we do our Friday updates, that we're going to end up talking more and more about how this is spreading throughout the financial system, throughout China's banking system, which when rock gets into the banking system, that's a real problem, as we saw in 2008.
Really key story here is that as we go into 2022, the story is going to shift. It's not just going to be about how much debt property firms owe and whether they can roll it over. It's going to be more about who actually owns this debt. And on the other side of this, who is going to be responsible and whether or not they're going to actually be able to weather this kind of stress and this kind of payment misses, particularly when it comes to these sort of weaker banks and weaker financial institutions.
Yeah, I mean, definitely. If I owe you $100, that's my problem. If I owe you $100 million, that's your problem. So we're definitely going to start to see the effects more and more of this crisis throughout the year, and obviously we're going to follow that as well. Speaking of the offshoot effects of this real estate crisis, it was reported this week that more and more wealthy Chinese investors are looking to pull their money out of China and move it to Australian real estate as a means of both of providing a safe haven for their money, but also generating larger returns than they can currently expect under the current real estate crisis in China right now. Chinese wealthy are definitely accustomed to making 10, 12, 15% returns, and as we've seen, as the returns in China are actually looking negative, at least on the real estate side, they're going to look to move their money elsewhere. And this was always a worry that we've talked about on this channel for Canadian real estate, for US real estate, that if things get bad enough in China, Chinese investors will look to pull their money and move it elsewhere, move it to other real estate markets. So although this report only listed Australia for now, Australia, Canada, US, the West, anywhere that's seen as a safe real estate market, those markets could be impacted by this crisis. And I know that Prime Minister Justin Trudeau has already talked about implementing a foreign buyers tax, and I suspect, at least marginally, at least I think it's part of the thinking, that it's to protect against this flood of Chinese money moving out of China into the Canadian real estate market, which obviously has its own problems right now. This crisis is still unfolding, obviously. We started in August, we were looking at just Evergrande, and we've seen it spread from developer to developer. Now it's gotten to the safer developers, now it's moving on to the banking system. This isn't something that happens one week and then we're finished up the next week. This is a slow-moving crisis. Much as the one in 2008 was, which really started in 2007. It was about a 2-year crisis, all told, depending on how you look at it. But this is something that we are seeing it continuing to unfold, and we're seeing that it's moving from sector to sector to sector. And I think we're going to start to see Beijing get even more aggressive with providing fiscal stimulus and monetary stimulus, and as they try to save not only these developers, but even more so, even more important, the banks from realizing from realizing a similar situation that we saw in 2008. So we are going to continue to have updates on this. There's billions of dollars of bonds due this month and over the coming years, so it should be very interesting to see how this plays out. Click like and subscribe if you want to get those updates, and thanks so much for watching.